It looks like the party is on again. All of the altcoins are going up, or pretty much all of them. The question is, how much longer can this rally last? Who is buying here? Who is selling here? Let's have a look at the on-chain data, the data most people are not looking at. Now, this market has been expanding since October of 2023. What we see over here is the stablecoin market cap of various stables. So we've got Tether, USDC, DAI, BUSD, and there are times of market expansion and market contraction. This contraction here started with the collapse of the Anchor protocol of Terra Luna. That's when the UST, not USDT, but UST stablecoin went to zero. It created fear in the market. People withdrew their capital. People moved from the crypto ecosystem back into traditional finance. But then the outflow slowed down, and at the beginning of October of 2023, there were deposits into crypto again. Here's how this chart goes up and down mechanistically. If you deposit your hard-earned fiat currency into a centralized exchange, that centralized exchange will send the money over to a stablecoin custodian. The stablecoin custodian then keeps the funds in an account, maybe buys some short-term treasury bonds with it, and then also mints the stablecoin on chain, sends it to your wallet, and then you can trade with those stablecoins on the chain. The minting we can see as an expansion of the stablecoin market cap. The redemption, so that's when you withdraw your money from the centralized exchange and get back into good old traditional finance, that's when the stablecoins get burnt again. So the market is expanding, and when there's more stablecoins in the system, of course, long-term prices should go up, including the altcoins. Now, the only real valid reason to get into the altcoins is because we expect higher returns compared to just buying and holding Bitcoin or Ethereum, right? We take on much more risk by buying especially the small altcoins. We should expect more returns because otherwise, risk adjusted, we get a pretty bad deal. Now, there are different metrics to try to figure out how the altcoins are doing, relatively speaking, to the rest of crypto. Is it actually worth it to take on this additional risk? One of those metrics is the others dominance. So others is simply an expression of the market cap of the altcoins that are not in the top 10. And dominance looks at how much percent of all of crypto is in those altcoins. We saw up until 2018 an establishment of more and more alts. So this was the ICO boom. And since then, we are trading somewhat in a range. And we are rather at the lower end of that range now. The others dominance is currently at 8%. And there is a chance for the altcoins to outperform the rest of crypto by 95%. Maybe potentially even 150%. It appears as if there is a rollover effect, as in when we are in a bear market, people get very spooked, sell especially the altcoins, and then we tend to see a bottoming out of that bear market because people buy into Bitcoin again. Because it's very hard to hold the altcoins long term. There's a lot of altcoin rotation happening. We don't really know what altcoin will participate in the next bull run. It's the easiest to just buy Bitcoin and Ethereum during a bear market. And so we've got that capital rotation. Usually it's Bitcoin that appreciates first, and then Ethereum follows. After Ethereum has run its course, we tend to see some performance in the altcoins as well. We also had this over here. This is 2020. First, it's Bitcoin that appreciates after a bear market. Then it's Ethereum. We didn't see the delay that much in 2023, but we had it again in 2024. First, it's Bitcoin that appreciates, and then it's Ethereum. And since the middle of April of this year, we see Ethereum dominance going up. So it looks like we might have already seen the second step of that capital rotation. When first Bitcoin appreciated, it went from 16K all the way to above 100K. Then Ethereum tended to outperform, and maybe now it's time for the altcoins. We know why Bitcoin and Ethereum performed that well, right? It's the ETFs and the treasury companies. We have seen how in the last month we still got positive supply absorption by the ETFs. So Wall Street is still buying Bitcoin, but only at 1.5% per annum, if the last month is representative of the demand. The Bitcoin inflation rate, by the way, is 0.85%. So there's more demand through the ETFs than there is new Bitcoin getting mined every year. For Ethereum, though, we saw much higher demand. Here, where we annualize the last month, we get to 9.6%. And so that's then one of the major reasons why Ethereum dominance went up. Now compare this with the others dominance That's now this line here in white. It seems like the two lines tend to bottom and top at very similar points in time. So Ethereum is bottoming here, the others dominance is bottoming here, the Ethereum dominance is topping here, and also the others dominance is topping at a very similar level. So there is some correlation. Not necessarily though, since the middle of April of this year. Ethereum did very, very well, but the altcoins did not outperform. So this transfer that we had in the past, where positive Ethereum performance also pushed up the altcoins, it was a connection that worked very well for many years, but it seems like there's some kind of decoupling suddenly happening. And so let's have a look at the ratio of the others dominance relative to the Ethereum dominance. Both dominance charts tend to move in the same direction most of the time, not recently though, but let's see whether or not it still really makes sense to buy the altcoins over Ethereum. We get then this chart, and I find this extremely fascinating. The others dominance relative to the Ethereum dominance, when this is high, then the altcoins are expensive. When this is low, then the altcoins are relatively cheap. The maximum move from the bottom to the top is 177%. And we are not at the absolute bottom here. But when we take away this initial adoption curve of the altcoins, we just look at the recent price movements. Then the average price, that's now the dotted line here, shows where potentially an equilibrium is. So the altcoins relative to Ethereum might currently be undervalued by 15% roughly. Or another way to look at this, there's a potential for outperformance until the equilibrium of 19%. There is a problem with this comparison though, because this looks at market caps. And the issue with altcoins is that most projects tend to issue more and more tokens over time, which doesn't change the market cap, but it does change the price. And the retail investor gets just the performance of the price, not of the market cap. Let me show you what I mean. This is WorldCoin. And WorldCoin is very close to the all-time high in terms of market cap. But have a look at the price during the same time period. It's very far away from the all-time high. Here the all-time high was at close to $10. Now we are at $1.26. So really, when there's more and more tokens that hit the market, as here the case with WorldCoin, we have a strong problem with price performance. Because that's economics 101. Price is determined by demand and supply. And if the supply grows faster than the demand, then the asset has to go down in price. This is a systemic issue with the altcoins. Every week we see roughly 1 billion worth of token unlocks. And that's just for the tokens that are tracked here on this website. Tokenomics.ai. 1 billion per week. The altcoins currently have a market cap of roughly 300 million. So that's 17% of additional supply hitting the market. Or over a period of 4 years, we almost double in terms of supply. And that's for the average altcoin. And so that's then the big question, right? Do we expect that the demand for the altcoins, the growth in demand, will be double compared to what we have in Bitcoin and Ethereum over the next 4 years? If we don't expect at least double the growth, then we should not buy the altcoins in aggregate. At least we shouldn't buy and hold them over such a time period. In the last 4 years, the altcoin market cap just went sideways. It did not grow at all, so the average altcoin price lost by 17% every single year. Or again, if you compound this to 4 years, there was a loss of almost 50%. And so when we take this data point, right, the middle of May 2021, and we compare the others market cap to Bitcoin, we see a decline of 68%. And again, on top of that comes the token dilution, which implies another 50% underperformance. So in the end, we're probably in the range of 85% or so underperformance versus BTC over those 4 years. So really, the main issue is token inflation. It's great when you're part of the team. It's great when you're a venture capitalist. It's not so great when you are just a retail investor that buys in while all of those tokens still unlock. And so yes, short term, the altcoins might be cheap relative to Ethereum. We are rather on the lower end of this long-term trading range. And the gains that have been made in Ethereum might partially roll over to the altcoins as well. The altcoins could slightly catch up. But does that mean that we should hold a diversified portfolio of altcoins and hold that over the many years? I don't think so. I think this is a viable approach for the stock market. I don't think that's viable for the crypto market because, again, crypto tends to have much more dilution. To just keep the current prices relative to Bitcoin and Ethereum, we have to see at least $1 billion worth of capital flowing into the market every single week. And I don't think that's very realistic long term. Short term, it might happen. Long term, probably not so much. Now, with content like this, I don't just want to help us beat the market. I don't just want us to make more money. I actually want to really have an impact on financial literacy. I want that after watching some of the videos here, you will act better with your overall portfolio long term. Because while it's nice to see back tests like this that tend to outperform just buying and holding Bitcoin, and it's also nice that there's now a copy trading pool where people here in the membership get very high outsized returns compared to the risk. And why those strategies also work pretty well for me over time, right? The gray line is buying and holding Bitcoin. The black line is what I achieved over the last 4 years roughly. And while all of this is nice and useful, what really matters long-term is risk-adjusted return. Because many people become millionaires short-term on paper, to then just afterwards lose it all again. I know it's not a sexy topic, but really what matters long-term is skill. It's not just figuring out a single market, it's about figuring out how to manage wealth long-term, how to be able to preserve purchasing power and build upon this year over year. For example, have a look at this video here. The very first video that I published in Premium, the different steps of wealth building. When should we move from selling our time to actively trading to then just allocating towards a portfolio? How can we in general take advantage of our monetary system since the money supply is expanding all the time and the US dollar is devaluing? There are a few winners in the system, but most people lose. And this video explains how this all works and how we can take advantage of the monetary debasement. Or this here, the fundamentals of portfolio allocation, or how to hedge macro risk, right, step by step. Or here, things like long-term expected returns and target allocation. Because that's a problem with most people. Most people just wing it. They don't really think about this deeply. How much should I have in crypto and in stocks and in gold and in property? How is this properly split up? How should I adjust this based on how I see the economy going? What's actually reasonable? These questions are much more important than trying to find the next altcoin. We can even dive a bit deeper into the numbers and try to risk adjust individual positions and calculate things like alpha and beta. People throw numbers like alpha around all the time, but they don't really know what it means. Individual winning trades are great. And yes, we do have this in Premium as well. And I share my individual trades as well. But really, the thing that really matters is risk adjusted long-term outsized returns. Making more money than just buying and holding stocks or just buying and holding Bitcoin. Having the right mix, having the right rebalancing approach, knowing exactly how to approach different situations. That we don't have to ask ourselves, should we buy this crash or should we now sell because the thing went up? We actually have a systematic approach, again, that most people don't have. I know this is not the sexy sale. The sexy sale is to just talk about the next 100x altcoin that more likely than not will go to zero. But even if you're lucky enough to hit the next 100x, the chances are that you're going to lose everything again. Most lottery winners are going broke 5 years after the win. It's unlikely that you're going to make money with any of those predictions. But even if you do, the likelihood of losing it all afterwards is extremely high. It's much better to take the time and learn the actual craft of proper wealth management. And only then, once you know what to actually do in certain periods, in certain situations, only then can you keep and steadily grow wealth. I do not believe that you can just wing it. It's simply too complex. You can actually watch all of the Premium tutorial videos just by signing up for $125 per month. And if you don't like what you see, you can just message me within the first week and I refund you 100%. If you want to become part of the next copy trading pool, which right now is closed for deposits, but a new one will open at the beginning of next year. Then you can also consider joining the yearly membership. So yearly members will get access to the copy trading pool the earliest. And so be careful who you trust out there. Don't just gamble with your wealth. Try to accumulate enough wealth at the beginning by selling time, have enough capital to invest, and then grow this slowly over time in a smart way that there's still outperformance, but there's not too much risk. Long term, again, it's all about risk-adjusted returns. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!